Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 28th of November 2020 and we're publishing our gold and silver weekly update for the week ending the 27th of November. We also briefly look at political events and economic reports which could shape what happens to the US dollar and therefore precious metal prices this coming week. Gold fell $82 last week from $1,871 to $1,789, having hit a high of $1,876 and a low of $1,774, a fall of 4.4%. And it's interesting again to note, as with the previous week, this past week's high and low were lower than the previous week's high and low. And once again, we shall continue to keep an eye on this as it does act as an indicator. In sterling terms, gold finished the week at £1,344. That's down £64 or 4.5%. And in euros, it closed at €1,496. That's down €82 or 5.2%. Silver fell $1.47. From $24.19 to $22.72, having hit a high of $24.41 and a low of $22.36, a fall of 6%, following the previous week's fall of 2%. In sterling terms, silver closed at £17 and 7 pence, down £1.13 or 6.2%. And in euros, it closed at €18.99. That's down €1.41 or 6.9%. The gold to silver ratio rose from 77.3 to 1 to 78.7 to 1. Bitcoin too is down this week, some $1,654 at $17,038, not being that far off touching $20,000 during the course of the week. And this fall of $1,600 follows the previous week's rise of $2,300. The Dow Jones closed on Friday at 29,910, up 38 points on the day and up 647 points on the week. The S&P 500 closed at 3,638, up 8 points on the day and up 81 points on the week. And the Nasdaq Composite closed at 12,205, up 111 points on the day and up 351 points on the week. All three indexes gaining more than they lost the previous week, and again approaching those all-time highs. Brent crude closed at $48.18, up $3.22, following the previous week's rise of $2.18 and the week before that of $3.33, rapidly rising close to that $50 level that we've predicted was where OPEC and OPEC Plus seemed determined to drive it towards, assisted obviously by a weaker dollar. WTI crude closed at $45.53, that's up $3.11, again following a previous week's rise, in this case of $2.29, and the week before that of $2.99. The dollar index stands at 91.79, that's down 0.6 on the week, following the previous week's fall of 0.36. So we can see at the moment, at least, the trend of the US dollar. Now, we concluded last week's report with the words, quote, "So once again, we're calling that gold and silver will be somewhat range-bound, gold 1800 to 1900, with a 1750 to 1950 outlier, and silver 23 to 26, with a 22 to 27 outlier. We suspect that gold will pivot around 1900, and silver around $24. Now, whilst we were well within our outlier scale, as we have experienced numerous times how quickly both gold and silver can rise and fall, we were a little too optimistic about where the mean average price would lie. We, to some extent, though, charted the reasons for the changes in the gold and silver price through a number of videos we produced this past week. On Monday, why gold and silver fell below support levels. Tuesday, stocks saw gold and silver dive. Then on Wednesday, our gold and silver midweek financial update. Thursday, $100 silver. And then Friday, why gold and silver prices crashed below resistance. And we've placed links to all of these in the description box below for ease of reference. Now, it was ironic that last week we also stated, quote, "We have to admit that for many, this trading range, which has now lasted many weeks, is becoming quite boring for investors, and we've noticed quite a fall-off in interest because of little movement. This is not surprising, but once again, all of the fundamentals for higher precious metal prices are in place. It's just the timing is a little more in the future than many would like," unquote. And as we look at the gold chart for last week, we can see that gold really did not have a chance from first opening, more or less, then falling or consolidating all week, reaching its low on Friday and staging a very slight recovery before markets closed. 4 key aspects seems to have dominated the week. 1, updates on the coronavirus vaccines and its progress, plus countering that, the increasing spread and rise in hospitalizations, not just in the US but across the world. 2, the value of the dollar as it gradually diminished. 3, continuance of rising equity markets, although there was a little bit of a fall and a rise. And 4, figures announced by China of a rapidly growing economic recovery, thereby potentially giving hope that the rest of the world will experience this too in the not too distant future. We shall talk about the economic data announcements in a couple of minutes. Now, looking at the technical side of gold, we can see that $1,750 is likely to be regarded as a key support level. Firstly, it's more or less where the 50-week EMA rests, and also close to the 38.2% Fibonacci retracement level. This is deemed to offer significant support. An interesting article published by A.G. Thorson yesterday, by the way, he is a registered CMT, an expert in technical analysis, which we shall read to you. It is quite short, but quite appropriate. Quote, "Gold is in the later stages of a decline that began in August. Our gold cycle indicator is below 100, supporting a near-term entry. Gold could dip below 1,700 in December, as outlined in our recent gold update. However, we see sharply higher prices in 2021. The 6-month gold cycle. Gold goes through the same process, rally, top, decline, approximately every 6 months. With each phase, we see the following emotional benchmarks, and becoming aware of them could make you a better investor. Near the cycle top, retail traders are over-leveraged. They only read articles that confirm their outlook, confirmation bias. They devise reasons why prices can only go higher, enlisting the fear of missing out, otherwise known as FOMO, F-O-M-O. Bearish breakdown. A bearish breakdown arrives when critical support is violated and retail traders rush to the exits to preserve profits or limit mounting losses. Often, extreme selling morphs into panic. Retail traders turn bearish. And near the cycle bottom, everyone bullish 3 months ago is now finding reasons why prices will continue to drop. They read bearish articles supporting ever lower prices. Prices bottom a few days or weeks later, and they're caught on the wrong side once again. With the recent breakdown below 1850, I believe gold is approaching a cycle bottom." Unquote. Now, to be fair, whilst we understand and use technical analysis, it's only one of the tools in our box, so we could not really contradict anything that he is saying as far as technical analysis alone is concerned. And also he's studying cycle theory, which is also relevant here. Now, very short term, we may be marginally more bearish than he is, and probably less bullish in 2021, though we certainly see prices higher than they are now, that's for sure. Now for Christmas, we shall be exposing what the pumpers have been saying since August and show you why they were inevitably going to be wrong. But that will be a fun range of videos to look at over the Christmas period. Let's hope they don't take them down before then so that we cannot prove our point. It's also important to note that trading volumes, because of the Thanksgiving holiday on Thursday and Friday, being the end of the week, was relatively low. Though we haven't got the precise figures as yet to show you, but we will when they are confirmed. Silver initially opened up at the beginning of the week and like gold then continued to fall, again reaching its lowest level on Friday and staging a minor recovery before markets closed. It's important to bear in mind that for a short period silver did fall below 22.50, and as we have often stated, should this be breached, then we could see a rapid decline to mid-21s and an attempt to dip towards the $20 level, though we're not quite there yet. Again, we can see what is happening is that silver is falling in line with gold as the monetary demand for it, or perhaps the speculative demand for it, eases, as markets are looking ahead to a vaccine being used, enabling the economy to pick back up. And when this looks like it's upon us, we shall undoubtedly see a pickup in the industrial demand for silver to compensate for its loss in monetary demand, as industrial demand traditionally has represented between 50 and 60% of the total demand. Now, technically speaking, the $22 level is roughly where the 200-day EMA rests, together with, again, the 38.2% Fibonacci level. And this is seen as a relatively strong support, though for us, other factors suggest that even this could be breached as we move into December. So, technically speaking, we have 22.60, followed by 22.40, followed by 21.65 as key support levels, with 23.30 as a key resistance level. Now, as mentioned in our earlier videos, this past week, economic data, or US economic data to be precise, was broadly positive on the early PMIs and inflation front, while inflation was zero, though negative as far as consumer confidence, consumer spending, personal income and jobless claims were concerned. Now, when we say negative, we mean worse than the previous reports. With further lockdowns, likely we're expecting a little more pain before the economics actually improve. Now, this coming week we have some very important data announcements, much more important than what we've had over the past 2 weeks. On Monday, we have the Chicago PMI for November and the pending home sales index for October. On Tuesday, we have the market manufacturing PMI for November and the ISM manufacturing index for November. Construction spending for October and motor vehicle sales for November. They are often closely watched. Wednesday, the ADP employment report for November, and on Thursday, of course, our normal weekly jobless claims, but also the market services PMI and ISM services PMI, both for November. And then Friday, the most important day, arguably, the non-farm payrolls, unemployment rate and average hourly earnings, all for November, plus the trade deficit and factory orders for October. So once again, we have the three important employment/unemployment reports. Important main manufacturing and services PMIs and motor vehicle sales. Now, as a broad rule of thumb, doesn't always apply, but as a broad rule of thumb, the ADP report on Wednesday should give some guide as to the non-farm payroll trend on Friday. And Thursday's weekly jobless claims will also, or should also, enable us to calculate the trend for Friday as well. And also, it's going to be important with the Thursday jobless figures to see whether the recent deteriorating position continues or not. Now, unless all of these figures come in in accordance with expectations, we can envisage an impact on the US dollar as well as precious metal prices in the direction opposed to how that data comes in. So if that data is positive, we probably expect precious metal prices to fall, but if the data is very negative, then arguably we should expect them to start to rise, as the likelihood of further bailouts will be more on the cards and thereby devaluing the value of the dollar. So where does this leave us for next week? Well, the dollar remains subdued somewhat, and we're still awaiting the ultimate outcome of the presidential election. Though it looks like Biden's the winner, it's certainly not concluded yet. The coronavirus figures are still worsening around the world, with over 62 million cases and 1.4 million deaths worldwide, and 164,000 cases yesterday in the US alone, and nearly 1,400 deaths. With this past week fall in prices, it admittedly makes it difficult to forecast this coming week, with the amount of economic data continuing to be announced, and the presidential legal saga seems nowhere near abating. So we suspect that whilst on Monday precious metal prices may continue their closing rise, so they'll initially move higher, the fall below key support levels that we've experienced this week suggests to us that further weakness could indeed be ahead. In addition to that, when we look at past trends for gold and silver, we traditionally see a decline towards the end of November, beginning of December, and then a rise towards the middle or end of that month and well into the new year. But, as many advisors will state, past performance is no guarantee of future performance. So we're going to be a little more cautious this week, expecting gold really to trade between 1750 and 1850, with 1700 on the downside and 1900 on the upside being outliers, though we suspect the price will be closer to the downside than the upside, and silver will trade generally between $22 and $24, with a $20, because that could indeed happen if we get below that 2160 level, with a $20 and $25 as outliers. And of course, we still have to await any potential stimulus package coming from Congress, which again, if it should be announced, would have an impact. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published, and do pop along to our Richard and Greg channel, as I've been able to get hold of Greg more often this past few days, and will continue to do so over the next few days, so there will be more videos available there, and we've put a link to that in the description box below. Finally, we wish you a safe, enjoyable weekend, and, as always, a prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.